Today on Wealth Nation, how income tax works. Filing your taxes might be one of the most important financial actions you'll take each year. It can also feel confusing or even stressful at times. The amount of income tax you pay is based on how much taxable income you've earned that year. Taxable income could include employment income, EI benefits, pension income, and even investment income, such as interest or capital gains. If you have regular employment income, then your tax may be deducted directly from your paycheck. This will be shown on your pay stub. Let's talk about identifying your tax bracket. The amount of income tax you owe is calculated when you file your income tax return each year. You are required to report your total income to Canada Revenue Agency, also known as CRA, when you file your tax return. The rate of tax increases as your taxable income increases and exceeds certain amounts, called tax brackets. Now let's consider deductions and credits. What's the difference? When you can reduce your taxable income and the taxes that you pay by taking advantage of deductions and credits, you'll really start to get ahead. First, tax deductions. These reduce your taxable income. Common deductions include RRSP contributions, child care expenses, and union and professional dues. Deductions won't directly contribute to a refund at tax time. However, it is possible that they could add up enough to put you into a lower tax bracket, which would mean that you'd be taxed at a lower rate. Let's think about non-refundable tax credits. These are amounts that reduce the amount of the tax you owe, not from the amount of income you earn. They will not contribute to a refund. This means that if your non-refundable tax credits can add up to more than the amount of tax you owe, the result will be that you will owe no tax. Examples are the disability amount, charitable donation tax credit, and the caregiver amount. Now let's talk about refundable tax credits. They do contribute towards a refund, or they might be paid to you in amounts throughout the year. The government will pay you the refundable tax credits you qualify for, whether you owe tax or not. To claim them, you must file a tax return. Examples include GST and HST credits, and the Canada Workers' Benefit, also known as CWB. The amount of income tax you pay is based on the amount of taxable income you made that year. You should know that when filing your taxes, you must remember to claim all the credits and deductions you're entitled to. The rate at which you are taxed is dependent upon which tax bracket you fall under. And you can claim tax deductions, which will reduce your taxable income, non-refundable tax credits, which will reduce the amount of tax you owe, and the refundable tax credits that contribute towards a refund.